Hello everyone, welcome back to Forex Signals TV. I'm Shain Vernier, market analyst over at forexsignals.com. Today we're going to talk about chart patterns. By far, chart patterns are one of the most popular technical indicators out there. Folks from all walks of life, from all around the world, trade chart patterns on a daily basis on all time frames to try to cash in on price action. Today we're going to talk about 5 of my favorites. We're going to talk about the flag pattern, the Doji, the inside day candle, the double top and double bottom, and the engulfer. I find that these patterns have treated me very well over the years since I got back into the market over a decade ago, and I wanted to pass along how to recognize them. And if you need to know how to trade them, I'm gonna have to ask you to jump into the trading room one of these days and enjoy a free trial. But definitely today we're gonna help you recognize and get accustomed with these 5 powerful chart patterns. So without further ado, let's get over to the trading lab and let's dig into the technicals. All right, guys, we're back in the trading lab. Today, we're going to take a look at the top 5 chart patterns that you need to be aware of. I don't care if you're a veteran trader. I don't care if you're a beginner. These chart patterns can help you get into the market and out of the market with some sense of confidence and consistency. The first one is a Doji. Doji is a very basic single candle pattern. Gives us a tremendous amount of information, even though it's only one candle. Number 2 is your bearish and bullish engulfing patterns. A 2-candle pattern really suggests potentially reversals in price action. Can also be used to trade with the trend when trying to get in on a pullback. Number 3 is a bearish and bullish flag. A flag, nice and tidy, nice directional move, a little bit of rotational in price, and you're looking to get in on the trend with a bearish or bullish flag. Number 4 is an inside day candle, one of my personal favorites. That inside day candle gives us breakout opportunities, ways that we could potentially get in on a directional move in price before it comes to pass. Number 5 is really a double top at bottom. I love these on longer time frames. They're fantastic. They can act as support or resistance, really just depending on prevailing price action. All right, let's go to the pricing charts. The first one we're going to look at is a Doji. Our Doji is about as simple as patterns get, whether it's candlestick patterns or basic classical chart patterns. Your Doji is right there. It's a single candle. It looks like a plus sign. What does that mean? It means that the buyers couldn't win, the sellers couldn't win. We fought to a relative stalemate. We're looking for uncertainty in the market. Typically, if trading volumes are low, that means we're in a very, very flat market condition. Many traders view this as a potential breakout symbol. I don't necessarily. I look for dojis within flat market conditions, potentially to help me identify a trading range and execute some of those reversion strategies that we've talked a lot about in the trading room. The second one of our patterns here is your engulfing patterns. Now, this is a quick look at a bearish engulfer and a bullish engulfer. First, the bearish engulfer. As you can see, this bearish engulfing pattern really traded above the previous period's high, then closed down beneath the period, traded beneath the previous period's low, closed right down to the bottom of that range, really signaled that a bearish move in price is on the way. Now, what we have developing right here is a bullish engulfing pattern. You have a previous range right here. We've traded beneath the low. Now we're moving above the high. We're probably going to get a close somewhere here in positive territory, barring a major reversal, and this is going to signal forthcoming bullish price action. So both bearish and bullish engulfing patterns, very powerful ways to either spot reversals, or if these occur within a prevailing trend on a pullback, perhaps you could use them to get in on the trend with the broader trend direction. So that's a fantastic two pretty darn good patterns there. Right here's flags. Once again, one of my personal favorites. I like flags because they're simple. A nice directional move in price, followed by a bit of stagnant price action, and then you're looking for a continuation with the macro trend. Now, what I will say here is this is a bull flag pattern. You've got a nice bull run called the flag pull. The directional move in price is your flag pull. In this case, this is a bullish flag, so this would be a bullish pull. Boom, nice run up, traded sideways for a few periods, and then you get that trend continuation to the top side here. A bearish flag is exactly the opposite. You're going to have a bearish move in price, followed by a period of consolidation, and then you're looking for the continuation of the prevailing trend. This is one of my personal favorite chart patterns. It's the inside day candle. As you can see right here, we have just a fantastic daily range, 22nd of September, and now we get that inside bar, that range that is firmly inside of the previous day's range. That's our inside day. It suggests that the market is tightening. We're seeing consolidating market conditions. We are getting compressed price action. Price is coiling. That can tell us a lot of things, potentially that a breakout is brewing. Now, I absolutely love to see these set up within a prevailing
prevailing bullish or bearish trend. With a bullish trend, we could look to buy above the inside day candle's high, maybe get in on that bullish price action, and on a bearish trend, sell beneath that low and get in on that bearish price action. So the inside day candle for breakout trading is a fantastic indicator. You're buying above the top of the inside day, selling below the bottom of the inside day, and more importantly, when it occurs within a defined trend, you have an opportunity really to get some good market, to get in on the price action with fairly good trade location. Now here on our gold double top, double bottom, what we have to be looking at here is two distinct tests. Now this is a fantastic monthly gold chart. You can see right here, there's your double top. You've got a monthly high right there in August of 2020, and you get the retest of that level in March of 2022. That's a beautiful level. Lots of ways you could trade that level. You could step up and sell in front of that, treat it as a potential resistance zone, figure that institutional sellers have been there in the past. Perhaps you can capitalize on a retest and a failure of that level. The second way would be to play a breakout above that double top, wait for price action to break the double top, and then buy a pullback from that same general area. Both strategies can be incredibly effective for you. And you can see right here, the double bottom works exactly the opposite. We have really lower extremes. We've tested our lower extreme right there. There's one test right there in March of 2021, and then another in August of 2021. And you can see, boom, we tested that, acted as beautiful support. Bidders stepped in front of that long-term double top, bid it higher, and then once it finally went, you could see the bearish price action really taking out most of those retail longs, taking them out, and price rotating to the bear. So those are 5 chart patterns that I would recommend to really any trader, even if you're a brand newbie, you're a market newbie, you're a market veteran. Those 5 patterns can help you get into the market with confidence and consistency. Remember, we're thinking about long haul profitability. If we learn how to trade these patterns within the context of our broader strategy, now we're working on building something with longevity that's going to help you make profits, not just tomorrow, but next week and next month and next year.
So those are 5 of my favorite chart patterns to trade. Back in 2011, when I got in the markets, I really relied a lot on chart patterns. They were easy to recognize, they were easy to study, and they were easier to trade. In my book, easy is good. Those are 5 fairly simple, straightforward patterns. You've got the Doji, the flag, the double top, double bottom, the engulfer, and the inside day candle. The inside day candle is my personal favorite. I like trading breakouts off of those inside day candles on crude oil and gold futures. Sometimes natural gas, but that's a bit more involved. Probably a better topic for a live stream. Now, the beauty of technical analysis is you can take it as far as your imagination will take you. And with chart patterns, those 5 are just the tip of the iceberg. We have a chart patterns tutorial over on our sister site, howtotrade.com. It's underneath the resources bar at the top. It's free for everybody. And in there, you have about 35 chart patterns that you can study in depth and take a look at maybe one that you like to trade. This is a pretty good one. This is the Doji pattern, the gravestone Doji. It's a certain kind of Doji. And as you can see from the table of contents all the way to what is it, how to identify, how to find it on a pricing chart, and a trading example, how to trade it. You know, these things aren't much good if you don't know how to trade it, and that's sort of our motto over at Forex Signals and How to Trade, is to help you develop as a trader. So in any case, I really enjoy making these videos. I appreciate your time and I value it. So be sure that you leave any and all feedback or comments below, good, bad, whatever. Just get involved. That's a big part of trading, is just to get involved in a community of traders and really aid your development yourself. That interaction can be priceless. It may just take a comment here, a comment there, before you can really make a quantum leap as a trader. Also, if you like what we're doing here, pound the subscribe button. You'll get that email blast direct to your inbox. Every time we make a move, you'll know it. And check us out on the socials. You know, it's always good to stay in the loop. The socials are a great way to do so. So for me and the entire staff over at Forex Signals and How to Trade the action well, and we'll talk soon. See you.